If we can be able to cover the trend lines, the bullish and bearish reversal patterns, the bullish and bearish continuation patterns. You can hear me, right?
Yes, sir.
Great. So we're going to start with the brains of the continuation and the reversal patterns, which is the trend lines. It's not that much of a trend smash or much of like, it's not that paramount that you have to be identifying trend lines all the time that you are trying to make a trade. It's just like a criteria that can help you in making a decision. Not that every time you have to be in a position to identify a bullish trend line or a bearish trend line. So it's not that paramount, but it's something that helps you. It's just like 1 + 1 is going to help you to know what is 10 + 4, you see? So that's the same thing when it comes to trend lines. So we're going to talk about bearish trend line and bullish trend lines. So what defines an uptrend and a downtrend at any given time frame? So each time frame can have a different trend. So you can have, say, a weekly time frame is going to be bullish, a daily time frame is going to be bullish, but you get an H4 time frame which is going to be bearish. Then you get an H1 time frame which is consolidating.
Bearish.
Yeah. So each time frame has got a different trend. Reason for this is that price is what? Price is fractal. It doesn't stop at one point, at one position all the time. It's always up and down. So fractal, it means that there are structures within structures. So you can have a monthly, a weekly, and a daily being bullish, but then H4, H1 becomes bearish, or vice versa. You see? So there's no subjectivity. There's no subjectivity on the rules to define a trend. They are mechanical and repeatable over time. Since we are primarily working with supply and demand imbalances, making a higher high or a lower low does not necessarily mean the existing trend is still valid and we should trade all levels in that direction. So every time you look at a chart and then you see price forming new highs, if it's going to the upside, or it forms new lows as price moves to the downside, that should not mean that you must always trade on each and every low or high that is formed, right? So what is an uptrend, right? An uptrend is defined in the same bracket as demand zones that are being respected. What do I mean by being respected? Let me illustrate here. So you can have price forming a new demand. You can see my illustration, right?
Okay.
Yeah, you can have price forming a new demand level, right? And then price is gonna rally away, and then it comes back, then it rallies away again. Here, at this high here, when price comes back here, you look to be a what? A buyer, because you are up trend, right?
Okay.
So trend is defined as demand areas that are respected and supply zones being taken out. Taken out, it means a breakout. It means price has broken out of a level. So you might have okay, let's do this. let's just illustrate a supply zone quickly, right? So we've got supply zone, price is moving to the downside. When price comes back again to this level, right? If price breaks out and close above, you see here, that means this level is now taken out. It has been invalidated, meaning it's no longer a what? A supply
zone.
You see?
Supply zone.
Yeah, so that what happens in an uptrend. So you've got demand areas being respected, supply areas are taken out, right? The bullish trend line should also be respected. I'm going to illustrate this on the next chart. So a higher high should remove the previous supply, just like what I've done here. So we've got a higher high here that has been formed, right? So this higher high has taken out this previous supply zone. So as price moves to the upside, new higher highs are going to be formed, right? So probably another higher high will be formed here. They need to take out the supply that would have been created here. You see? Yeah. So a higher high should remove previous supply to validate the demand zone. A new ascending trend line plus at least one opposing zone taken out. I'm going to illustrate graphically for you on this one. You should always ask yourself, what has the imbalance and potential demand zone accomplished? Has it taken out an opposing supply? The reason for this is for you to define a proper structure which you are going to trade from. So that is an uptrend. For a downtrend, it's the opposite. It means supply areas are respected and demand areas are taken out, right? So we can have price falling, right? Let me just illustrate this quickly. Let's see. No, I didn't draw it nicely. So in terms of a downtrend, it means supply areas are being respected, as in new levels of supply are being formed as price trades to the downside, right? When market pushes to the upside, it's not going to take out this supply. From that supply, then that's where you're going to take your short position, and then price is going to form another lower low. Okay? That confirms a down trend. So a bearish trend line should also be respected. A lower low should remove the previous demand. So this low here, the second one here, it has taken out a demand which was formed here.
Yeah.
Right? And that means a new descending trend line plus one opposing zone has been taken out. Again, you should always ask yourself, what has the imbalance and potential supply zone accomplished? Has it defined a proper zone for me to take more shots from? You see? That's what you need to be asking yourself when you see the zones being formed. So here's an illustration of a bearish trend line, right? So you can see price is moving to the downside. Price is in a bearish momentum. The black line represents your trend line support. So price is moving to the downside, right? Forming higher low, lower lows at the bottom. You see, lower lows and higher lows at the top. So what market is doing, each time it comes to the black line, which is our trend line support, right? At 1, 2, 3. Those are trend line support. So price is failing to break above. The moment it breaks above at 4, you see here at number 4. Right? When it trades back, this is where you need to be a what?
A buyer.
A buyer, right? It means number 3, that's our higher low. It was taken out and we had a new higher high formed. right? A new higher high was formed after price closed above number 3. This now clearly defines we are in a uptrend. So if that is a clear definition of market turning into a bullish momentum, where do we take the long trades? When price comes back to the trend line support, that's where you load your long positions. Is that clear?
Yes, sir.
Yeah. So that's how you trade long trades using a bearish trend line, because you'll be looking for price to break out of the trend line support and the retest. The retest is the one which gives you a clear entry to the upside. Yeah. So now here is an example of a bullish trend line. Bullish trend line is the opposite now. You see? So market is moving in an uptrend, right?
Uptrend, okay.
Price is moving in an uptrend. So it means demand zones are being respected. So we've got 1, 2, and 3. This is clearly our lower highs, and then we have higher highs here. You see, we've got higher highs. That's a clear definition of a bullish trend line. Now, from last week, right? From what we did last week, you can clearly see we've got a channel, right? Yes, we are talking about trend lines, but can you see that there's a defined channel from, let me highlight that for you. Let me clear up. You see the higher highs. If I connect these higher highs, remember that bullish channel is here. This is our bullish. That's our bullish channel. So now you wait for price to break out of the trend line support, which is the black line. When it breaks out, for you to be a seller, you need to see price retesting the trend line support. The moment price gets here, this is where you are going to be a what?
A seller.
A seller. You are selling to the downside. This is an illustration, the same illustration that I gave you when you send me the chart for which asset is this? I think it's Euro USD, if I'm not mistaken. We had a supply zone on a daily. We're going to go to the charts and then I'll show you. So we had a price action where we had the supply and then price rallied away. And then today it retested that supply. And then it traded lower. So we're going to go to the charts and then I'll show you how that panned out. So this is how you trade using trend lines, but not exactly that you're just going to be using trend lines. This has to be in conjunction with the supply and the demand. You see, the supply and the demand, that's the backbone of it. The trend line just helps you to have clear confirmation that the zone is going to hold up, right? The zone is going to be a valid zone for you to take the what? The trade from. So it's not like you have to clearly be waiting for the trend line to be broken and then retested. No, it's just for you to have a clear zone defined. You understand that part, right? Hello? What's going on here? Hello, can you hear me? Hello? Okay, I think I've lost you here. I hope you heard what I was saying there. His network disconnected. Anyway, I'm just going to carry on and then I'll record the session and I'll upload it for you. So yeah, like I was saying, you need to have the trend line to retest a supply zone in case of a bullish uptrend, or a demand zone in the case of a bearish trend line. So now I'm going to go on to the chart. I'm going to go onto the chart, and then I'm going to show you how Euro USD gave us a very good example on how to use the trend line in conjunction with supply and demand. So you can clearly see on the Euro USD daily time frame, we have price moving in a bullish direction. You see, price is bullish, right? That is clearly defined. Price is bullish. So I'm going to illustrate how you'd have used the bullish trend line to be in a position to trade this move that happened to the downside, right? So if you can hear me, Jerome, I have continued to record the class so that I'll just upload it for you, because I see you're having issues with your connection there. Something is acting up today. So I've kept on recording and explaining what we were talking about so that you have the recording afterwards. So I'm going to go to a H4 time frame on Euro USD. And then let me just zoom out quickly. So you can see we have price moving into an uptrend here. And then we've got the higher highs this side, right? We've got price in an uptrend, and you can see here we've got the high, then we've got the low formed, another low, another high, then we had price breaking out, right? Price did break out, so that's number 4 from the illustration. And then we had a retest. You see here at the retest, this is where you would have been hunting for short trades. And as you can see, price did a retest and dropped from that area. It gave a very nice short setup. So there's a couple of pips there. You're looking at about 75 pips. So yes, you wouldn't have got like all of the pips, like 75 or such. You'd have got probably half of that, because you'd have waited for, obviously my lines are not perfect, this is illustration, but you can see already this candle is on, it's like 54 pips. So this is how you use trend lines in conjunction with supply and demand, because if you see on H4, let me zoom out. On H4, you can see already this candle here, the high, it tested this level. And that level, if we go to a higher time frame than this, say a daily time frame, right? On a daily time frame, you can see already here, you can see what we have, our daily supply zone, right? I hope you can hear me now. So this retest here, where I'm highlighting, it happened on an H4 time frame with a bullish trend line that was broken out, and then price retested, and then eventually it traded to the downside. So this is what I wanted to illustrate in regards to a bullish trend line and how you trade using the bullish trend line. Can you hear me, Jerome?
Yes, I can hear you, sir.
Yeah, because you disappeared for a while there.
Yeah, I lost you there for a moment.
Yeah. So I just kept on recording, so I'm gonna upload this.
Yeah, you can. Yeah, yes. Thank you, sir.
Yeah. So now we're going to continue. We have talked about the trend lines. So now I'm gonna show you. We're gonna talk about the continuation now, the bullish and the bearish continuation pattern. Now you see these patterns. The whole idea is for you to be able to read price action, to break down market structure, top-down analysis. These patterns, they're going to come in handy because they're all price action patterns. There's no like indicators involved or anything, but it's the patterns that we use to confirm whether we are bearish or we are bullish on an asset, right? So now I'm going to show you the bearish continuation pattern. So a bearish continuation pattern, right? This pattern follows the current price flow, meaning if market is bearish, bearish continuation is going to follow through, right? So price is going to drop massively. Let me illustrate that for you. So price is going to drop, right? That's bearish. When price drops massively, it's going to form what we call a base. It's going to form what we call a base. So price is going to drop, right? And then it's going to form what we call a base. A base, this is a period of, say, consolidation, right? Because price does not just keep on massively dropping to the downside. But after that base forms, the first drop, right, becomes your new area of supply, right? The first drop from the base. So now it will be something like this. So we had a consolidation and then price continues dropping after the consolidation, right? So this will be a consolidation area. And then we've got a sharp move to the downside again in terms of price action, right? After the consolidation, price sharply move away again, continuing with the bearish momentum that we have seen here, right? So price would have dropped and then forms a consolidation area, or what I normally like to call a pause in the market. And then it massively drops again, right? So this base now, you see, the base that has been created from the first drop and then base. From that base now, that's where we look to be sellers when market comes back. So it means when price retest the base, you look to be a what?
Seller.
A seller. You see, so this one, the bearish continuation, it's basically a drop, base, drop. That's a bearish continuation pattern. So the base is basically the consolidation time. So you find out that probably during London session or New York session, price will be massively moving in a bearish momentum, like it's falling like crazy, like 50, 70, 80 pips. But during the Asian session, when market volume is now low, then you've got consolidation. But the following day when London opens, then market is going to keep continuing with the bearish momentum. So this is what we call a bearish continuation pattern. So here's what it looks like on the chart. So you can see the chart that I've illustrated. This is gold. It's a H4 time frame, right? So we had price testing a new supply zone which was created between 1288 and 1285, right? When price retraces back to that level for the price action to go, look for price action to go short. So 1286 would have been ideal. So you can see already we've got the drop which happens here. right?
Okay.
So this is the first drop from a supply area, right?
Yeah, yeah.
That's the first drop. Then you see the price action that happens here at number 4, which is our base, right? Which is our
Okay.
base. You can see there's consolidation, and then price drops again, right? So when price comes
Okay.
back up here, see this level, this is where you look to
Okay.
sell.
Sell.
Yeah, because there's a new supply zone now that has been created by the base here.
Base. Okay.
You see, there's a new supply zone. So when price comes back up here, you look to be a what? A seller.
Seller.
Yeah. So this is what we call a bearish continuation. It means the bearish momentum is continuing, going to the downside. So you look to be a what?
Downside.
Seller.
Seller.
Yeah. You look to be a seller. I'm going to show you on the chart a bearish continuation. But firstly, let me show you what a bullish continuation looks like. So a bullish continuation, this pattern follows the current flow of the market, which is bullish now, right? Price is going to rally away sharply from an area, which is basically a demand zone. Price is going to rally away from a demand zone and forms a base. From the base, it will sharply react again for the second time, going to the upside in the same order flow as price, which is bullish momentum. The base that it forms from the first rally becomes a new demand area. And when price comes back into this area, we look for bullish trades only, meaning we are buying, right? So you have price moving away sharply from a demand zone, and then it forms a base, period of consolidation, a pause in the market, some sort of things like that. Then after that, another sharp
Goes
move
up.
to the upside, right?
Upside.
So when price comes down back again here,
Into the zone. Yeah.
you see, this is where you look to be a what?
A buyer.
A buyer, you see, because you have a new demand formed here. Because the consolidation, what it does in terms of advanced price action now, the consolidation, it means market is building orders in both sides, right? Many retail traders, when they see this sharp rally, right, they are going to load more longs and some are going to load short positions. So orders will build up on the top side and the bottom side, right? But mostly the orders that are going to build up, they'll be on the upside. Most people will be anticipating market to trade low. So their stops will probably be up here. So this sharp move to the upside is the one that takes out all the people out of the market. So a consolidation area means market is building liquidity. There's orders being added into the market. So here's an illustration of a bullish continuation pattern. So this is CAD JPY, Canadian dollar against the Japanese yen. So we've got the first rally, right? The strong rally from a demand zone. You see my blue area, that's my demand zone.
Okay.
Price rallies away, right? Number one, it rallies away. Number two, price drops. So this is our base. See? So this is H1 time frame. So if you go to a 15-minute time frame, this H1 candle represents a consolidation period. Yeah. And then we have another strong rally at number 3. See here, number 3 candle.
Okay.
We have another strong rally, right? Now, when market comes back here, number 4, this is where we look to be buying, because the demand zone that has been created at number 3, we expect that zone to what? To hold. Right?
Okay.
Yeah, so that's a bullish continuation because we're expecting the bullish trend to continue. This trend which has been formed, we expect it to continue here. You see? So that's a That's a bullish continuation pattern. So these patterns, you are going to see that they do form almost on a daily basis. Not that we trade every day, but almost every day you're going to see that these patterns, they are going to be forming on the charts. So now let me open the MT4 chart and show you before we talk about the bullish and bearish reversals. So let me show you on the chart an example of a, let's say, a bullish continuation. Bullish continuation. We've got the Euro GBP, right? So Euro GBP, you can see what happened here. Let me highlight that for you quickly. So we've got a rally here, right? Market rally to the upside here.
Okay.
And then there's this candle price action here. So this is a daily time frame. You see this candle here with a funny price action, the one in the middle. That's our base, right? That's our base. And then we have another strong rally to the upside. So I'm going to mark those zones. Okay, let me just mark this area here. So this is our strong, this is where the first rally originated from. Let me change the color quickly. Let me change the color quickly. All right, so this is our first rally. And then we've got a base that was formed here. Oh, sorry. We've got a base that was formed here. Don't worry about the rectangles. They're not going to be in order because I'm going to drop down to an H4 time frame so that you can see what I'm trying to explain. So our first rally was here. So our first rally is this. Price rallied.
Okay.
Yeah. And then we had this consolidation period here.
The base, okay.
Yeah, the base. And then market rallies again. So now Euro GBP, you'll be looking to a buyer when market comes back into this area. Now, if you look to the left, you can already see the confluence, which is the confluence, meaning the signs that are going to help you to determine whether the area is going to be a strong area to be a buyer. And you can see already we've got a new demand zone here, right?
Okay.
We've got a new demand zone. Let me clear up this quickly so that we can highlight it. Let me clear up quickly. So we've got a new demand zone that was created, and the last down candle that we've got is this big bearish candle. So I'm gonna mark its low, right? Right, I've marked its low, and I'm gonna mark where it broke to the upside. So yeah, this is not gonna be perfect, but you're gonna get the idea of what what I'm trying to put out. Now I'm just gonna get rid of the lines. So when market comes back into this area here, we look to be buying.
Okay.
So that's an example of a bullish continuation. So we had a rally and then a base, and you can see on the base, market forms a new demand zone, right? A new demand, an original level of demand was created, so that when market comes down here, when market drops back here, we look to be buying. So it becomes clearer the more you go to lower time frame. So let me go to an H1 time frame. Let me just zoom out a bit. Right. So on an H1 time frame, you can see that when price comes down here, the chances of market just keep going to the downside, they are like 10%, because this level is going to provide support. There's buyers who bought, especially in this candle here. You see, there's a whole lot of people who bought here, big institutional guys. They wouldn't want to see price keep going down. That's where you have to capitalize now. You see, you place your buy limit order for market to go to the upside.
Upside.
Remember, a buy limit order. Do you still remember that?
Yes, yes.
Yeah. So you go to your new order. Let me just show you quickly. New order. You are on Euro GBP. Pending order. We need to place a buy limit. Let me just put a mini lot. So Euro GBP, this is for example 6. So it's 90894. 90894. That's where we look to be a buyer. And then 90894. I'm going to put 30 pip stop loss at 90590. 90590, that's my stop loss. And then my target from the entry of 90894, I'm going to target this level here. So that's 9237. So that will be my target, 9237. That's how you place a buy limit. So I've basically said, okay, if market comes down here, I need to be a what? A buyer.
A buyer.
Yeah, you see, I've already placed my buy limit with all the parameters specified, right? I've got my stop loss, because it means if price does reach my stop loss, the chances of it going down there are very likely, because it means this level won't have hold. But if this level has got strong interest of buying, it's gonna hold and price is gonna bounce and go to the upside.
Upside.
Right. So let me see if I can show you an example of bearish continuation. Right. We've got Brent crude oil here, right? So market has been moving to the downside since this drop here. You see? So we had 1, 2, 3 drops. Price is massively moving to the downside. Then we get this candle here. See this price action here? That's our base, right? After that, market massively drops again, right?
Drop.
Yeah, this was on Tuesday. Oil dropped all the way to $39.40. So when price comes back in this area here, when oil trades back up here, you look to be a what?
Seller.
A seller. You see? You look to be a seller when price trades back. So you can see already, since we are on a daily time frame, market has already offered the chance on lower time frame to jump in on the short move that have been happening on the, you see here, this is a base that was formed. I think this is the daily base. You see this area here.
Okay.
Yeah. So now we've got another base here. Let me just copy this quickly. So whenever you see price coming back into this range, yeah, this level here just missed it a bit. You see this high. This would have been a good entry to the downside, because we are retesting. We are retesting this base here. So that's how you use the bullish and the bearish continuation, because you expect market to continue in its direction, whether it's bullish or bearish. So it's basically you jumping onto the same bandwagon. So now I'm going to show you, I'm going to illustrate to you. So we have talked about the trend line. We've talked about the bullish and the bearish continuation. So now I'm going to show you a bullish reversal and a bearish reversal to wrap up. So I'm going to show you a bullish reversal. Now where am I? Right. So what then is a bullish reversal, right? So a bullish reversal is formed when price drops into an area of strong demand and form a base and then reacts sharply away from that demand. Price moves very fast away from the zone. This in turn shows us that there was institutional sponsorship in the form of buying, right, by professional traders. When price comes back to that zone, you want to be a buyer. You want to be looking for long positions. So here's an illustration of a bullish reversal. So you can see already we had price dropping massively away. We've got price dropping here. This is a daily candle, by the way, right?
Okay.
Yeah, we've got price dropping massively into an area, and then it forms a base. You can see this price action of candles here. Market is clueless here. There's no clear direction of where it wants to go. That is our base, right? Now,
Okay.
when it rallies away the first time, you probably miss that rally. But when it comes back now into this area, this is where you need to be a what? A buyer.
Buy.
You see, a bullish reversal, it means you are looking for buying opportunities. A bearish reversal means you are looking for selling opportunities. You see, so the rally that is formed from the base, the rally, the moment when price moves away from the base to the upside in a bullish reversal, when price comes back, you need to be a what? A buyer.
Buyer.
Yeah, I'm going to illustrate on the chart what I mean by this. So now let me show you a bearish reversal illustration. A bearish reversal now, on the other words, is this again is the reverse of a bullish reversal. It's the opposite. Price rallies into a strong area of supply. So let's say the market is like this, and then we have a strong rally into a supply. And then in that supply area, price starts consolidating, right? Price is consolidating in a supply area, thereby forming the base. So this will be this will be your base, this area here, right? And then sharply moves away from that zone. Then it's gonna drop massively, right? This will illustrate now to us as retail traders that there was institutional selling. The only people who can massively sell like this is the institutions, because those are the only ones who move the market. So what you have to do now as a trader is to wait for the price to come back to that area where it formed a base, so that you hunt for short opportunities. So when price comes back here, you need to be a what?
A seller.
A seller. That's a bearish reversal pattern. So the first drop clearly confirms to you that, okay, there is some selling opportunities at this area here. There's a lot of people, there's big guys who sold. So you wait for price to come back into that area for you to be a what? A seller. Because whoever sold here, they don't want price to keep going to the what?
To the upside.
To the upside. They're going to lose big time. You see, the institutions, when they lose massively. They're not talking of small money. So here's an illustration of a bearish reversal. So we've got price rallying from a demand area, probably this level here. Price rallies away, then it forms a base, this area here, and then it sharply turns away to the downside. That clearly defines this zone here. When price returns to this level here, you need to be a what? A seller. You see? So now I'm going to show you now on the chart what this looks like on the chart. The same chart that you sent me today, that's a very good, clear definition of, I think it's a bearish reversal, if I'm not mistaken. And then we have a bullish reversal on CAD JPY. No, CAD CHF, if I'm not mistaken. Yeah, I think it's CAD CHF. So you can see my MT4 chart, right?
Okay.
Let's see. Let's go to CHF JPY. Right. Let's go to a daily time frame. Is this the one? No, this is not the one. Where's Euro USD? Right, Euro USD daily. Right, Euro USD daily. You see, we had price rallying away massively to the upside. Let me highlight that. You see here, that's a daily.
Okay.
That's a daily chart. And then in this price action here, on lower time frame, this is where our base is going to be. Price then drops. When it comes back here, you need to be a what? A seller.
Seller.
When it comes back again here, you need to be a what?
Seller.
A seller. So I'm going to drop down to a lower time frame so that we can clearly see. So let me go to an H4 chart, right? So you can see price rallies away. We had a strong move into this area, right? And then we had a base. You see these candles here? That is our base, right? And then price drops. So when price comes back here, you look to be a what? A seller, right? Obviously, there's this discrepancy here where price trades high above. This is where you have to wait now, you see, for the price action to confirm. Because when you see this bullish candle here, this one here, when you see this candle, you have to be patient enough to wait for price to close below it, like here. So your entry would have been here to the downside. And then price comes back again. You see here. So these last two H4 candles for Euro USD, that's a very good trend to the downside using the same base that was formed from the first time. Because if I'm not mistaken, that's almost more than 60 pips drop on Euro USD since 7 p.m. this evening. Euro USD has dropped almost 70 pips, if I'm not mistaken. Let's see. Yeah, 77 pips. So what this does now, it gives you the ability to trade trades that are going to be, in most cases, in your favor. You're not going to be opening. Of course, you're going to lose. Everyone loses in the market, right? But you're going to minimize your losing trades. Remember, using a return ratio of 1:3, when you're trading, if you are having a 30 pip stop loss and targeting at least 60 to 90 pips for every win, you only need to win 4 trades out of 10 for you to grow your equity. So what this does, all this that I'm showing you, firstly the trend lines, the bullish and bearish reversals, the bullish and bearish continuation patterns, they give you the edge to always make sure that the trade that you are taking will be in your favor in like 70-75% of the time. No one is going to be 100% correct in the market. That is a lie. No one is 100%. Everyone loses. But you need to minimize, you see, the way you lose, the number of trades that you lose, you see, by having all these criteria to consider when you are trading. Right? It takes time to understand this, Jerome. You must bear with me on that. It's not going to be like you learn today, tomorrow you're a pro. No, it takes time. It does take time. So yeah, this is what I wanted to share with you in this class today. I hope you have understood a bit, and I'm also going to send you the notes now. As soon as we are done, I'm going to send you the notes and upload the video for you and send you the link so that you have something to revise on, because today I see your network has been a bit bad. Yeah. So yeah, I don't know if you have any questions.
No, sir, not at the moment.
Not at the moment.
I will ask if I have questions.
Yeah. So I'm gonna send you the notes, and then I'm gonna give you tomorrow, Saturday and Sunday, to watch the previous video that we did. I'm gonna send you the link and this class. Then from Monday, I'm gonna have some assignments for you regarding trend lines, bearish reversals, bullish reversal, bullish continuation, and bearish continuation. I'm gonna have some assignments for you. So tomorrow, Saturday and Sunday, that's the time for you to be bombarding me with questions, so that when I give you the assignment, you know what you're going to be doing.
Okay, sir.
Yeah.
Okay, sir.
All right, Jerome. Have a great evening.
Okay, you too. Thank you very much, sir.
All right, you're welcome.
And thank you for being so patient.
No. You're stuck with me, bro.
Okay, sir. Okay, sir.
You're stuck with me for the next, I don't know how many years.
Okay, thank you, sir.
All right, man.
Okay, sir.
Ciao.
Keep well.